All right. Okay, so we're going to be talking about filing our taxes today. So we're going to be talking about a 1040EZ and a 1040A. These are the most basic tax forms. So this is for like if you have a very simple, not complicated tax to file. So like if you own your own business or you're self-employed, this would not be for you. Those are much more complicated. These are just basic. Like we'll talk about the 1040EZ one. That's the first one we'll talk about. So that is like you're single or married filing jointly. You have no dependents, so you have no kids or no, technically a dependent could also be like an elderly parent you're taking care of. A dependent is just anyone who is dependent upon you for income. So no dependents other than yourself or your spouse. Your income is less than $100,000. Your income is just from like wages, tips, kind of like the normal income. Your wages aren't from anything crazy. You're weird. And your taxable interest is not over $1,500. So your taxable interest would be like you have some kind of savings account where you have, your savings. And technically, if it's in any kind of savings account, it is accumulating a little bit of interest. We've talked about that. So technically, the interest that you're accumulating with your money just sitting in wherever it's sitting is technically income. So as long as that interest that you're getting, that extra interest on your money is less than $1,500. So in general, this is like our basic taxes, okay? So we will do an example of this. So we're going to talk about Elizabeth. And so we're going to have Elizabeth is on the front. So we'll also be looking at Elizabeth's forms kind of together. Alrighty, so Elizabeth Allison is a food editor for a magazine. She has received a W-2 form from her employer and a 1099 from her savings bank. What's a W-2 again?
It's a form.
It's a form.
It's like just have to fill that out for work.
So your work is supposed to give it to you. It's like a summary from your work, from your employer, and they're like, all right, this is how much you made, and this is how much we withheld. So remember, throughout every paycheck, you can see it on your paycheck of how much they're holding back to give to the government. They're like paying your taxes for you. Okay. So a W-2 again is a summary of how much you've made, how much they've withheld, of federal income taxes, Social Security, Medicare, all that kind of good stuff. And if you pay anything extra, the summary will be on your W-2. What about a 1099? What's a 1099?
Isn't that for like extra?
Mm-hmm. So I want you to think of a 1099 as your side hustles. So any additional money you make doing anything else, whether it's like this person has interest from their bank account, whether it's the stocks that you have, whether it's if you wrote a book and it's the royalties, any of your side hustles that you're doing and getting money that hasn't been taxed on yet. So that's your 1099, and then this is her W-2. Alrighty, so what is Elizabeth's taxable income for the year if she is filing as a single taxpayer? So we're gonna do her 1099 easy, which is this right here. We're gonna look at her W-2 and 1099, and we're also gonna look at this tax table. So let's calculate her income. So we're gonna do her adjusted gross income. Remember, your gross income is before taxes. Adjusted gross income just means like your regular W-2 wages and any side hustles. So this is her W-2, the 1040EZ. So the first line, and this is all her information, her name, her address, her social, all that good stuff. So line 1 is wages, salaries, tips. This should show up in your box 1 form of your W-2. So how much did she make according to her W-2?
$83,200.
Yep. Ooh, this font is way too big. It's not going to work out. 83. I need to make this smaller.
Go big or go home.
No, what's happening?
Where's her W?
Yeah, it does.
Her W-2 is on your extra page too.
WD-40.
Alright, sorry. Alright, so right here on her W-2 is her wages, her money, so $83,600. Alrighty, 2 is taxable income. If the total is over $1,500, you cannot do a 1040EZ. So this is her extra taxable interest. Okay, from her 1099. So it's less than $1,500. It's $900. Sleep. All right, so that's 956 according to her 1099.
Good job.
This is the green on Elizabeth's. Alrighty, line 3 is unemployment, or apparently Alaska gets some kind of dividends, but didn't say anything about that, so that's going to be 0. Line 4 says to add line 1, 2, and 3. This is your adjusted gross income. So remember, your gross income is before taxes. Adjusted gross income just means we're adding up, we're making all of your adjustments, adding up everything we have to add up. So once we add those two up, I need a calculator. 83,600 plus 956.
84,556.
556.
Skills.
Alright, so we're just totaling up our income. Alrighty, line 5, if someone can claim you as a dependent, check the appropriate boxes. So remember, this is where it gets tricky when you guys are like young adults and you have to be careful. So if your parents are still claiming you, which my parents did all the way through college, they were like, nope, we're still helping you out, we're claiming you. Then you can't also claim yourself. So I did have a job in college and I did get W-2s and I had to do taxes, but I always had to check that someone was claiming me. Like my parents were also claiming me. So like you kind of have to be careful with that because some people are like, oh, I'm claiming myself. I want to get my own tax return. Yet your parents are also claiming you as a dependent, so they're getting money for you. And so that's where you can kind of owe the government once they figure out that you were kind of counted twice. So you got to be careful with that. And so and this is all tracked by your Social Security number. So you have to do your Social Security number to do your own taxes. And for your parents to claim you, they have to kind of do your Social Security number too. So it will be flagged because your Social Security number will show up twice. So be careful with that. Just make sure, ask your parents, are you still claiming me? Do I need to claim myself? What's up with that? So it didn't say anything about that, so I'm assuming that no one is claiming her. All right, so the bottom line says, if no one can claim you or your spouse if a joint return, then enter 10,300 if single and 20,600 if married filing jointly. So I'm going to enter 10,300. I really need to. 10,300. Okay, so this is a deduction. We're going to end up subtracting it. That's what the next line says. We're going to subtract it. So this is since Elizabeth is single, you get to deduct 10,300 from her taxable income. So remember, taxes are a percentage of your income, so it's good that she's getting this deduction. So like what she's getting taxed on is a little less than her gross. So line 6 says subtract 5 and 4. So we're subtracting 5 from 4. So we're just subtracting that. So yes, 74,256. So this is your taxable income. So that's good. Like you had to pay taxes on a little less than what you thought. All right, and so this changes based on whether you're single or married. This changes on whether you have dependents, how many dependents you have. But if you have dependents, that's a different form.
What was the 10,300?
What was it for?
Oh, I see.
It was from right there, yeah. But if you're
Wow,
filling out a
so-
1040 EZ, then you don't have dependents, so that won't be there. When we do the next form, you'll see where that is. But so that's just you're single, so you get a little adjustment. What is it called? It's not an adjustment. It's the deduction. I want to use the right verbiage. This is like a deduction from your taxable income. All right, so that's the answer to this question. What was her taxable income? It's 74,256. And we just did that with that little green paper, literally just adds and subtracts for us.
What's this? Extra stuff.
Oh, that was just like the definition of a 1040. Alrighty, inside, still talking about Elizabeth. How would Elizabeth's tax form differ if she were married, filing joint return, assuming that her spouse had no income to report? So we're saying that the first few lines we're adding up the income doesn't change. So what would change if she was married?
Box number 5.
Box number 5. So what about box 5?
20,000.
Okay, so actually it'd be they. they would get a $20,600 deduction from their taxable income instead of $10,300. I can get it done. Instead of a $10,300 on taxable income. No, that's better. Well, it's actually just perfectly double. And we'll talk about why in a minute, but I can talk about it now too. It's just because, like, so this was assuming that the income didn't change. So the reason you get more deducted from your taxable income is because there's two people sharing that one income. So that's why this one is exactly double. Anyways, question number 3, suppose that a single taxpayer wages are W and the taxable interest is D. Write an algebraic expression for the taxpayer's taxable income. So it's kind of like what we just did. So if her regular wages are D, any additional income, or sorry, regular wages is W, any additional interest or whatever dollars is D. So let's make an expression. So it would be the regular wages plus any additional dollars. But this is your adjusted gross income, so we'd also have to subtract. This is a single taxpayer, so 10,300. Like our formula for finding our adjusted gross income. I'm doing a lot better at explaining it than I did the first time. I'll give you that. My first period was like, can you say that all over again? I was like, yes, I know it was bad. I'm getting better. Alrighty, so what is Elizabeth's tax? So that was just what we just calculated, was just her taxable income. So that's like the amount of money she's going to get taxed on. So now we actually have to figure out how much tax does she have to pay. So this is the rest of it. If you notice the 1040 easy ended with line 6, and this one starts with 7, so this is like the rest of it. So line 7, our federal income tax withheld from your W-2 forms and your 1099. Federal income tax withheld from W-2. Okay, so this wants to know how much has been withheld, right? Yeah. Federal income tax withheld. Okay, good, yeah. So our federal tax that has been withheld so far is on your W-2. It's right here, so it's on Elizabeth's W-2. So this is how much has been withheld from her employer already. So every paycheck, wherever she gets monthly or whatever, and they've taken a little bit every time, and so for the year they've withheld a total of $15,884. Oh, I just remembered. All of them on your prep work and while you're doing your taxes, you'll notice this is the decimal, it's 0.00, because we're always going to round up to the nearest dollar. So all of your answers on the prep work, well, I shouldn't say up, it's not always up, it's just depending on if it's 50 cents, more than 50 cents or less than 50 cents. But you're rounding to the nearest dollar, like you won't have any change. It's always rounding up if it's 50 cents or more, or down if it's less. But anyway, that's why it has all these 0.00s, because we're not dealing with change. All right, and then all right, line 8A is earned income credits. I don't know what that is, but apparently it doesn't apply. We didn't learn anything about that. And then line 9 says add 7 and 8, so that plus 0 is still just that. Alrighty, line 10 is our tax. So use the amount from line 6 above. So line 6 was her taxable income, which was that 74,000 number. What was it? 74,256. Okay. So So use the amount from line 6 above to find your tax in the tax table in the instructions. So here's the tax table. So she's making 74,000. I go to the 74,000 tax table, and then I break down even more to see what window that she falls into. Since it's 74,256, it would be in this window. Again, is she single or married, filing jointly?
Single.
Single. So this is how much her taxes are, how much she owes. 14,363.
Can you have to pay that?
Yes, but we'll talk about that in a second. Line 11 is 0. I don't know what it was, but it was 0. I kind of blocked it off though. Healthcare, individual responsibility. Didn't say anything about that, so we'll assume it's 0. And then 12 just says add 10 and 11, so that plus 0 is still just that. So this is how much.
Add line 7 and 8.
This is how much she owes. But our next question is asking. I think it's the next one. Our next question is asking, does she owe the government or is she gonna get a refund? I think that's 5. I think that's 5. That's what I'm talking about, yeah. So that's how much she owes in taxes for the year. But question 5 is asking, does Elizabeth get a refund or owe the government? So remember, withheld is what your bank or your employer has been holding back from every single paycheck. So that number that was withheld on the W-2, there's 2 H's in withheld, is 15,000 something, right? 884. Right? And now her taxes due that we just calculated was 14,000 something. What was it? 14,000?
600, yeah.
363? Yeah. So looking at this is how much they've withheld so far for the year, and this is how much she owes. Is she going to get a refund, or does she still owe the government? She's going to get a refund.
Wait, so do you, like, how do you pay your taxes?
You phone them.
You just
do
do
what
that
we just
and they
did.
take it from you?
Well, you have to, there is a form where you like do your routing number of your bank. And so if you get a refund, they route the number to you. If you owe the government, I don't think they can automatically take it from you. Like
What
you,
if
just
you
adds
owe
up in the
them more
end?
and that's like more than what's in your account? I feel like you should.
then that would be like a federal like tax, not tax evasion. That's when you avoid paying your taxes. I mean, you're just like you owe the IRS. They could seize your things. Like if you own your house, they could take your house. They could take your car.
Better money
Oh, if you can't pay it to them?
Better benefit.
I mean, they'll probably make like some kind of payment plan.
So technically you're not paying anything if you owe them. But like if you get like what your job withholds from you, like for her,
Mm-hmm.
she would just get money back.
Yep. And let's figure out how much money she'll get back.
Oh.
Let's subtract it. 15,884, take away 14,363, and so she gets $1,521 back as a refund.
$1 million?
I think I did.
I was like,
Don't you have to be 18 to get it back? Yeah.
I think unless you probably, unless you like file for emancipation, like when you, if you do that, then you're like separate from your
But if you
parents.
have a
and
job,
you're-
your
your
parents
parents
can
can
get
get
your
your
right?
Well, if you're their dependent.
Yeah.
Yeah.
Okay, so yeah.
All right, skip number 4. So let's go back to number 4. Suppose that Elizabeth had been filing as married, filing jointly with her husband, and their combined tax income was the same as reported in line 6. Why is the tax lower? So this is talking about like here. So we looked at her, it was single, but look if it was married filing jointly. So what she has to pay is less, or what they would have to pay is less. So the reason is because we kind of already talked about it, is because this is 2 people sharing this same window of income. So you don't have to pay as much in taxes. Because so like separately, it's like they're not making this much. They're making, half of that, or, a third and a fourth.
So I
Yeah.
was wondering the same thing. I was like,
So what
why
about
would
the people
they
that have
make
like 5 wives?
I don't know how, well, see, that's why it's not legal in all states, because we don't really have the way to do that actually, but some states it is legal, so I'm sure they have a special tax form for that. It's like I think just Utah is the only place where it's legal, right?
One of my friends was in Kentucky and she had to pay a state tax form along with, like, obviously we don't do that here.
Mhm.
So what's that about?
It's just some states have an extra state tax. Like it'll show. See,
Be extra?
it's on your W-2. There's a W-2. See, this is like a federal, and then some of our other ones have had it. Oh, it's down here, state, and sometimes there's a local tax too. Extra taxes, just like more that's been withheld.
Oh,
and
yeah, because she said that she had to do that. but she
That's
didn't.
probably what like one of these places, and like this is a little old. And it's not like super old, but this like these form. I did go to the IRS website and see if I could use like literally like a 2021 one. But it was a little too complicated because I couldn't use the same exam. I would have to use all new forms. Like I would have to get a new one of these because like this changes every year, this changes every couple of years. So I tried to use a very updated one. It just wasn't working out great. But it's similar. It looks super similar to that. But anyways, that would be like one of these lines. If you paid extra taxes, that would be like one of those
Oh,
lines.
okay.
And it would probably be a different form because remember this is like the most basic, simplest one. Okay. Where were we at? Oh, how would it be different? So it's less because it'd be two individuals sharing that same amount of money, so you don't have to pay as much in taxes. What was the wording I did earlier? I don't remember. Yeah. So it would be because like why is the tax lower? Let's do because that's two taxpayers for
One income.
yeah, but I was gonna say for that that same one income. Because like instead of, one person making 74,000, it's two people only making 74,000, so they don't have to pay as much as one person making 74,000. So that would be, I don't know if you've ever heard like in movies or whatever about how like people, like one of the reasons to get married is for the tax benefit. So like you would see how the difference between, if you were in a relationship, it's always like, well, why are you getting married? What's the point? And like it's just a piece of paper. But like tax-wise, it's helpful to get married. There's a lot of things that are beneficial. See, because like this is smaller. What you have to pay in taxes is smaller, and this is bigger, like what you subtract from your taxable income. So there's two places where it's beneficial if you were married filing jointly than versus just being single making that same income.
Yeah, but the money you get, you get this person.
All right. Oh wait. 6. So Leo is filling out a 1040EZ form. His employer withheld $12,907 in federal taxes. He has calculated that he owes $13,952. Does he get a refund or owe money? In either case, what is the amount?
I can already tell him he owes me.
Yep, he's gonna owe money. I'll just do the same format I did up here. So if they withheld $12,907, and then he calculated his taxes, and he owes taxes due $13,952. What they withheld was not enough, so he will owe. Now, if I subtract it the same way, it is going to be a negative number because it's a smaller number. Take away a bigger number. But when we type this in our in the prep work, don't do the negative. But this would be negative 1,045. So like in your prep work, it asks owe or refund. So this would be owe, and how much it would be. He owes 1,045.
This lesson hasn't been hard. I feel smart.
The next one is slightly more complicated. I don't know. But it's really just reading instructions. It's just very wordy and like kind of legally sounding. It is just.
I don't like that.
I mean, I'm not gonna lie. I don't do my own taxes. I just go because like what these places, like let's take TurboTax for example. What these places do is just like kind of they fill out this form for you by asking you just one question at a time. Like literally, you go to TurboTax, you do your like name, address, and social security, and then it's like, are you married? Yes or no? Like, yes. Are you gonna file together? Sure. And then it's like, do you have any dependents? No. Or now it's yes. Yeah. So like it's literally just asking you these questions, but in like a simpler form.
Yeah.
Like, do you have any other income to, claim? And it's like, no or yes. Like, do you have stocks? Do you have this, that. So it's like asking these same questions, but in like a simpler way. And then it literally is just like the software is just typing it in, like putting it in for you, sending it to the government for you. So.
What if you go through like an alternate way of doing your taxes?
So we've done H&R Block also. Like my husband's grandmother worked for H&R Block for like years and years and years, and it's just a whole thing. So we used to go there, and you like pay them. Like what we did, it's like a flat rate. It was like $200, and they usually will just take it right out of your refund. I mean, we always get a refund because like we're not self-employed or anything. So
What if they mess up their taxes and turn your taxes in?
I think they have a lot of checks and balances so that they don't like more than one person is looking at it. They kind of have a system. I think that's the whole point. Is that people don't want to mess it up doing it themselves, so they go there because these people that's all they do for a living. They probably have a manager that like overlooks it, kind of like pays everything.
Since you're both married, only one of you fills out taxes for the both of you, right? Or is it?
Yeah. No, I mean, yeah, we do like together. We file it
So
together.
you can be married and file
But you
separate?
can do it separately.
So you would get more taxes though?
Not necessarily.
Oh.
It's just like, and that's for people that like kind of don't combine their income, which some people don't, and that's fine. I do. Like the money just goes into the account. It's like we don't have to do like his money and my money. It's just like the money pays the bills.
So what would the difference be if it was separate accounts and you're married?
But like it just depends. Like you can decide to do like married, filed jointly or separately.
So the jointly would be if you shared a bank account?
Not necessarily. Like you could not share a bank account and still file together.
It's just whether or not you choose to file
Yeah.
it. It's just.
I don't know, maybe some people are just like one of the spouses more private, or maybe they have like a lot more income, or like they have a lot more side hustles, or they kind of want to, I don't know.
My parents did that for a while, and my dad always did it.
All right. You're doing a great job. All right, so a 1040A is similar. It's also the most basic form, but it's if you have dependents is the main difference.
Attention teachers, pardon the interruption. Student Wi-Fi should be working for the Chromebooks. Teacher Wi-Fi is still down, but the Chromebook Wi-Fi should be working. Thank you.
I forgot.
Anyways, so the main difference is just dependents for a 1040A. So Kenya and Robin Omar are married with one child. Kenya is a pharmacist and Robin is a store manager. Their W-2 forms are on the extra page. So this is the back side. This is the Omar family. They receive $987 in interest on a bank deposit and $1,200 in stock dividends. So remember, stock dividends is like if you own stock and your company is making money, you get a portion of that money. Anyways, I just want to remind you, because some of my other classes forgot whether you added or subtracted it. This is additional money you're getting, you would add it. All right, so then how many exemptions can Mr. and Mrs. Omar claim? So exemptions is a vocabulary word. It's different than a dependent. So a dependent is people that depend on you for income. So like children, anyone that is living with you and reaping the benefits of your income. That's a dependent. An exemption is a little bit different. Those are just how many people are using that one income. So the difference is that you can claim yourself as an exemption. So if it's both of them and their child, that means there's 3 exemptions. There's 3 people using that one income. So like they would have one dependent, like one person that's depending and not contributing at all, or maybe not contributing much. But an exemption is how many people are using that income. So 3. So the 3 is both the parents and the child. Kenya, Robin, and child makes 3. Alrighty. So we're going to determine the Omar's adjusted gross income. They receive, and we're going to count the 2 extra bits of income they got. So this is both of their W-2s. Okay, so if you notice that this line starts at line 22, we're going to like skip the whole beginning part because it's the same as the other one. So like 1 through whatever is exactly the same as the other one. So we kind of need to jump to that spot. So let's figure out their adjusted gross income. It would be, how much does Robin make according to Robin's W-2? 100 and what? 20. Okay, we'll round the change at the end because we want no change. How much does Kenya make?
52,126.76.
Okay. And then in the question it said that they received interest, so this is an addition to their income. And they received some stock stuff. This is an addition to their income. 120.97 plus 52, 126.76 plus 97 plus 2. Okay. So their adjusted gross income, which is just all of your money together, is $119,434.73. So I don't want change. How would I round this? Up since it's above 50 cents. So 435. All right, so that's their adjusted gross income. All right, we're gonna skip 22A. It doesn't apply to us for this problem. So for 24, it says enter your standard deductions. And I was like, I don't know what the heck that is. But then there was a little bubble attached to it. And I was like, oh, that probably has something to do with this. So I read the little bubble that was attached to it. And standard deductions for people who check any of the boxes. Well, we didn't do that. All other single or married filing separately are this, but they're not filing separately, they're filing together, so it's not that one, not that one. And then it says married filing jointly or qualifying widowers would be 12,600. And they're not head of household, it's not that. So in that line 24 box would be they're married filing jointly, so I would put this number according to that little bubble. Line 25 says we're going to subtract line 24 from 22. So we're just subtracting this from our income. So 199,435, take away 2,600. So this is 8. Sorry, the number doesn't look right. Let me do this again. 119,435, take away 12,600. There we go. All right, so 106,835. So we're just subtracting that from our income, and that's based on us filing married, or the Omars filing married. And the next one is about their exemptions. So how many people are relying on this income? So it says multiply 4,000 by the number on line 60. So 60 wasn't up there, but we answered that. We'll say 60 was how many exemptions. So how many exemptions did they have? 3. So you multiply, where's this line? 4,000 by how many exemptions they have. So 4,000 times 3, which is 12,000. Next line says to subtract those. Subtract line 25 and 26. So that's another deduction you get to take away from your taxable income. So 106,835, take away 12,000. So 94,835. Alright, so here's where we need to calculate their tax. See how it says tax bold. So including any alternative minimum tax. Oh wait, is this the one where we had to do it, or is this one? No, this one. Sorry, sometimes I get ahead of myself because I don't read. Okay, good. Okay. All right, so we're gonna calculate the tax based on their income. So it's like the one for Elizabeth. I just included less. So it's like this. they would go, since they're in the 94,000, so they'd go to the 94,000 page, then they'd find their little window. So this is their window. So they're in between 800 and 850. Now this, remember this column was single. This column is married, filing jointly. This one is married, filing separately, and then this one is head of household. So if you notice, the married filing jointly is the smallest one, the least amount you have to pay in taxes. So this is how much they have to pay. So they have to pay $15,294. This is their tax they owe. Line 30 just says add 2829, but I don't know what this is. It's blank, so I guess they don't. I guess they don't have any tax credits. I don't know what that is. So we'll just that plus 0 is still just this. We're gonna skip all these. It just must not apply to them. All right. So where it starts applying again would be subtract line 36. From 30, so 36 is 0, so 0 minus this is still just going to be this. These last few are just staying the same. I think I just hid them because I didn't want it to give away the answer too soon. And then same thing with line 39 is that you'd add 37 and 38, but this, I accidentally blocked it. This was 0 also. 15,294. So if you had any extra tax exemptions. Determine the owner's tax for the year. Alright, so now we gotta decide, do they owe the government or are they good? So this is how much they owe, but we have to see how much their employer has withheld for them. I need to copy and paste their W-2s to the next page. Copy.
Add more of their stuff.
Mm-hmm. Yep. Paste. Okay. All right. Here, you move over here. You move over here. Bigger. All right, so do the Omars get a refund or owe the government? So I have to figure out how much they have paid in federal taxes already. That is on their W-2. So how much did Robin already pay in federal income tax?
8,000.
Yep. Mm-hmm. 87,659. Round at the end. Plus, how much did Kenya already pay in income tax? 6,198 and 65 cents. So together, they've paid $14,964.64. So together they've paid $14,965. Round up to the nearest dollar. So do they owe the government or? I have space. I should have left more space for this one. All right, so this is how much their employer has withheld. I'm gonna do withheld. But we just calculated that they owe taxes due. What was it? 15,000 something. What was it? 294. So what has been withheld is not enough to cover what they owe. I mean, yeah, what they owe. So they're gonna owe a little bit of extra. So I'm gonna subtract 14,965, take away 15,294. Now remember when I subtract this, it's going to be negative because I'm doing a smaller number, take away a bigger number. But when you type it in, don't do the negative. They just owe, and how much do they owe? It's $329. Saying owe and a negative would be a double negative. I'm going to skip to 12 real quick because I wish I would have made these flopped, but I didn't. But I already made copies, so we're going to go with it. 12 says, suppose that Kenya had an additional $50 withheld from each of his biweekly paychecks. How would that change the amounts reported on his W-2 form? With the additional money withheld, would they have gotten a refund or owed the government? So if they did if they would have saved $50, or their employer would have withheld $50 extra from each bi-weekly paycheck, how many paychecks is bi-weekly?
26.
So if they would have done $50 every paycheck, 26 times in a year, 50 times 26, that would have been an extra $1,300 to the withheld. Extra to the withheld amount. So if you had an extra $13,000, would that have been enough to make them not owe and have a refund instead? Yeah. So what's the question? Would they have gotten a refund? So yes, refund. Because the only difference they needed was like $329. All right, let's go back up to this one real quick. It was just a different person. Sorry. All right, Lisa and Bob Z have a combined income of $87,980. They received a 1099 form for $1,100 in interest from their bank and a $13,000 in stock dividends. They have a total of $4,000 in adjustments to their gross income. Determine their adjusted gross income. Well, we're gonna add their income. We're gonna add the interest. Anything from a 1099 is extra, so we're adding it. We're gonna add their stock, but they have a $4,000 in adjustments. We're gonna subtract that. That's so $87,980 plus 1100 plus 1300, but we're gonna take away 4,000. 980 plus 1100 plus 1300, take away 4,000. So 86,380 is their adjusted gross income. Why what?
Why would someone have adjustments?
Adjustments are like, let me look at one of those forms, see if we have an example. Are any of these labeled adjustments? Adjusted gross
I
income.
would keep this in there, just stick it in there.
Yeah, I just folded it in half and put it in there. If you don't want to lose it, you can like put a little piece of tape or glue or something like that. I don't know, they like weren't super like adjustments wasn't a vocabulary word. I wish it would have been like to all encompass it. So I don't really know an example of that would be like, I don't know, deductions based on if you're married, filing jointly, or like if you have kids or something. I don't know. Because it wasn't clear on adjustments. It's not like it was a vocabulary word, so I don't know.